SK Hynix is a name you might not know, but it's a giant in the tech world. This South Korean company is one of the biggest makers of memory chips. These chips are the brains behind your smartphones, laptops, and even the servers that power the internet. Without memory chips, our digital world would grind to a halt. SK Hynix is a critical player in the global supply chain. It supplies memory chips to some of the biggest names in tech, including Apple and Samsung. When your iPhone stores photos or your laptop runs smoothly, chances are SK Hynix played a part. The company's success is tied to the ever-growing demand for memory chips. As we use more devices and store more data, the need for these tiny components continues to surge. But like any company in the fast-paced tech industry, SK Hynix faces challenges. The recent downgrade by Morgan Stanley has cast a shadow over its future, raising questions about the company's ability to navigate a changing market. Morgan Stanley, a powerful investment bank, recently sent shockwaves through the tech world. They issued a double downgrade on SK Hynix, slashing their rating from overweight all the way down to underweight. That's like a referee giving a red card and then another one for good measure. What spooked Morgan Stanley? They see trouble brewing in the memory chip market. In simple terms, they believe there will be too many memory chips chasing too few buyers. This oversupply could lead to a classic case of supply and demand imbalance, driving down prices and squeezing profits. Morgan Stanley isn't just worried about short-term fluctuations. Their analysts believe this downturn could be more than just a blip. They see structural issues in the memory chip market that could linger for a while. This double downgrade isn't just bad news for SK Hynix. It's a warning sign for the entire memory chip sector. It suggests that the good times might be over, at least for now. The Morgan Stanley downgrade has thrown a wrench into SK Hynix's plans. The company was riding high on a wave of strong demand and healthy profits. Now they're facing the possibility of a sharp reversal of fortune. The most immediate impact is likely to be on SK Hynix's stock price. Investors tend to flee from companies facing uncertainty, and a double downgrade from a major investment bank is a big red flag. We've already seen SK Hynix shares tumble, wiping out billions of dollars in market value. But the pain might not stop there. If Morgan Stanley's predictions about the memory chip market come true, SK Hynix could be looking at shrinking profit margins. Oversupply means they'll have to sell their chips at lower prices, eating into their bottom line. The company might also be forced to scale back its ambitious expansion plans. SK Hynix has been investing heavily in new factories and equipment to keep up with demand. But if demand dries up, they could be left with expensive facilities standing idle. The troubles at SK Hynix are a symptom of a broader shift in the memory chip market. After years of booming growth, the industry is showing signs of slowing down. This has implications for other big players like Samsung and Micron Technology, as well as countless smaller companies in the supply chain. One of the biggest concerns is oversupply. Many manufacturers ramped up production to capitalize on soaring demand. But now, demand from key sectors like smartphones and PCs is weakening. This has created a glut of memory chips, pushing prices down. The slowdown in China, a major consumer of electronics, is also adding to the woes. The Chinese economy is facing headwinds, and consumer spending on gadgets is taking a hit. This downturn is a reminder that the memory chip market is notoriously cyclical. Periods of boom are often followed by busts, as supply and demand constantly try to find equilibrium. Section 5. Navigating uncertainty. A look at the industry's future. The memory chip industry is at a crossroads. The days of easy growth appear to be over, and companies like SK Hynix are facing a more challenging environment. But that doesn't mean the future is bleak. The long-term demand for memory chips remains strong. The rise of artificial intelligence, cloud computing, and the Internet of Things will require vast amounts of memory. Companies that can adapt to these new realities will be well-positioned for success. SK Hynix, with its strong track record of innovation and manufacturing prowess, is capable of navigating these choppy waters. They've weathered storms before, and they have the resources and expertise to emerge stronger. The key will be to focus on high-growth areas like data centers and automotive applications. These sectors are less susceptible to the cyclical swings of the consumer electronics market. Section 6. The importance of memory chips, from smartphones to servers. Let's take a step back and appreciate the critical role memory chips play in our lives. They are the unsung heroes of the digital age, powering everything from the smartphones in our pockets to the servers that run the internet. Think about your smartphone. Every photo you take, every app you download, every text message you send requires memory. These tiny chips store the data that makes our digital lives possible. But it's not just about consumer electronics. Memory chips are also essential for businesses. Data centers, the backbone of the internet, rely on vast amounts of memory to process and store the ever-growing flood of data. Without memory chips, our world would grind to a halt. We wouldn't be able to connect, communicate, or access information with the same ease we do today. Section 7. The cyclical nature of the market. Understanding the ups and downs. The memory chip market is known for its boom and bust cycles. It's like a roller coaster ride with periods of exhilarating highs followed by stomach-churning lows. These cycles are driven by the delicate balance between supply and demand. When demand outstrips supply, prices soar and chip makers rake in the profits. But when supply exceeds demand, prices plummet and companies scramble to adjust. Several factors can disrupt this balance. New technologies, changes in consumer behavior, and global economic conditions can all impact the demand for memory chips. The recent slowdown is a reminder that these cycles are inevitable. The key for companies like SK Hynix is to navigate these ups and downs while positioning themselves for long-term success. Section 8. SK Hynix's position, a major player in a competitive landscape. SK Hynix is not alone in the memory chip arena. It's a tough and competitive market, with a handful of major players vying for dominance. Samsung, another South Korean giant, is the undisputed leader, commanding a significant market share. Micron Technology, based in the United States, is another formidable competitor. These companies are constantly innovating, developing new technologies, and expanding their production capacity to stay ahead. It's a high-stakes game where only the most agile and efficient survive. Despite the intense competition, SK Hynix has carved out a strong position for itself. They are known for their technological prowess, manufacturing efficiency, and strong relationships with key customers. Section 9. Investor sentiment. Why the downgrade sparked a sell-off. The stock market is driven by sentiment, and right now, sentiment towards SK Hynix is decidedly negative. The Morgan Stanley downgrade has spooked investors, leading to a sell-off that has sent the company's share price tumbling. Investors are worried about the factors we've discussed: oversupply in the memory chip market, weakening demand, and the potential impact on SK Hynix's profits. When a respected investment bank like Morgan Stanley issues a double downgrade, investors tend to sit up and take notice. It's a signal that the experts are seeing trouble ahead, and that's enough to trigger a wave of selling. The sell-off is a reflection of the uncertainty surrounding SK Hynix's future prospects. Investors are unsure how the company will navigate the challenges ahead, and they're voting with their feet. Section 10. Looking ahead, key factors to watch in the coming months. The future of SK Hynix and the memory chip market as a whole remains uncertain. Several key factors will determine how this story unfolds in the coming months. One crucial factor is demand. Will demand for memory chips from key sectors like smartphones and data centers rebound, or will it continue to weaken? The answer to this question will have a major impact on SK Hynix's fortunes. Another important factor is the competitive landscape. How will Samsung and Micron Technology respond to the slowdown? Will they engage in a price war, further eroding profit margins, or will they find ways to cooperate? Finally, keep an eye on SK Hynix's own actions. Will they be able to adjust their production plans, reduce costs, and focus on high-growth areas? Their ability to adapt will be crucial for navigating these turbulent times. Section 11. The final word: uncertainty remains, but opportunities exist. The Morgan Stanley downgrade has cast a pall over SK Hynix, but it's not the end of the story. The memory chip market is cyclical, and downturns are a natural part of the business cycle. While challenges lie ahead, opportunities also exist. The long-term demand for memory chips remains strong, driven by the relentless march of technological advancement. SK Hynix has the experience, the technology, and the resources to weather this storm. The key will be to adapt to the changing market dynamics, focus on innovation, and maintain a long-term perspective. The coming months will be crucial for SK Hynix and the memory chip industry as a whole. Investors and industry watchers will be closely monitoring developments, looking for signs of a turnaround or further deterioration. One thing is certain, the ride is far from over.